Hello, everybody. So today I want to spend a few minutes explaining why AI and Bitcoin are not in a bubble. Why buy Fiat is the title of this video, because a lot of people are claiming that AI is overvalued, claiming that Bitcoin's not going anywhere, Bitcoin's going to 60K, and that they're selling it to buy Fiat, because when you sell an asset, you're most likely getting US dollars for it. So, folks, let's get started. So, the markets have not behaved normally. They have not behaved according to the season for the longest time. This is supposed to be a good season. This is normally one of the best seasons out there. The fall, October, November, December, and especially the so-called Santa rally. This is supposed to be a good season. Unfortunately, I think Mr. Market is trying to test our patience. It's trying to pry away these best assets from so-called lettuce hands. You know, one of my favorite memes out there, lettuce hands, people who sell whenever there is a shakeup. And granted, it's been a longer shakeup than usual. I'm perfectly fine. I love these markets. But, people are upset because, Bitcoin was 120 not too long ago, more than 120. We peaked at 126. We're at 80-ish, so it doesn't look very good. Bitcoin, by the way, is going through one of its phases. You may remember it had that phase in April, at some point. 87,000. So 87,000. We've essentially traded like a stable coin around 87.5 roughly, and this is a 1 week time frame. This is the whole week, and strategy today is not behaving well at all. We are entirely depegging from Bitcoin. The market is being entirely irrational. The stock market is being entirely irrational. We're now sitting at a price to NAV of probably a 1.07 or 1.06. Strategy down nearly 4% when Bitcoin's roughly flat. I guess it's down 1%, but Bitcoin's roughly flat. But if you look under the hood, Stretch is now back at 99. We're trading at 99 for Stretch. Give it January. We're going to get another increase in the dividend of Stretch, and we're going to force it to get to 100. And at that moment, Saylor will be able to print a bunch of Stretch shares, which he can use to generate a Bitcoin yield. Bitcoin, the market has been trying to pry away the Bitcoin asset from us and putting it in the pockets of institutional buyers who, never buy the top. There's a lot of people. Like I said, I don't understand this. The sentiment has never been better on Bitcoin. It's never been better. Like, everything's going well for the asset, and it's down more than last year. So we're below where we were last year at this level. So anyways, the market is testing you. The market is testing our patient, claiming that Bitcoin's a bubble, claiming that AI is a bubble. The same things we've heard for the longest time for Bitcoin, of course, and the same thing with AI, the same thing we've heard for the longest time with any tech stocks, but nothing looks like AI. So let's talk about Bitcoin. Is Bitcoin a bubble? So I wanted to, let me see, where am I right now? Okay, is Bitcoin a bubble? Well, okay, so the big debate right now, one of the big debates right now is how about precious metals? So let's talk about precious metals a second. So we have silver and we have gold. You can see parabolic moves this year, 2025, they've had parabolic moves. But if you look at silver or gold, they haven't done anything for a decade. Each of them hasn't done anything for a decade. And in my view, if someone is buying precious metals right now, it's chasing. You're chasing. I mean, these assets are way up. When we compare Bitcoin against gold over the long run, this is, of course, the difference. The gold has returned 59% average annual return each year for more than 10 years, 10 and a half years. The gold ETF, same dates, only 12.5%. So gold still returns way less than the Nasdaq. Bitcoin, on the other hand, has done triple the Nasdaq. It's returned 3 times as much as the Nasdaq. And what do we know about precious metals? We know that as price for precious metals goes up, as the price of gold goes up, more people go and prospect gold. It becomes more profitable to prospect gold. Like, the same is true of oil. Whenever oil gets past like $80 or $90, you have people in Canada who are starting to get oil out of the ground, and low quality oil and all of that sort of stuff. The price is an indicator for people to go out and buy more. Now, with Bitcoin, you can't do that, of course. With Bitcoin, you can't go out and buy more. The number of Bitcoin issued is fixed no matter what. And it's just the miners who increase their profits or decrease their profits. And I want to call especially your attention, of course, to quantum proofing the protocol, which, there seems to be a consensus at some point, in my view. If we quantum proof the protocol, that means we may have to reduce the supply of Bitcoin from something like 21 million to probably something like around 15 million, because we would have to deactivate the OG wallets because they are the ones who would be at risk of quantum cracking, right? So wallets that didn't use the best practices of double spending, wallets that double spent the money, those are those that will be at risk. They're older ones in the protocol. They would have to be removed from the protocol or just spun off into another blockchain where anything goes. And if that were to happen, that would actually that could create a big spike in Bitcoin. So not only is Bitcoin fixed at 21 million, but when we quantum proof it, we may have to reduce the supply. We may have to reduce the supply. But whether we're talking about gold or precious metals or AI stocks, there's one thing that we need to talk about. It is fiat. And of course, this channel is called Beat the Denominator. And by the denominator, I mean the dollar. You gotta beat the dollar inflation. And I know most people don't think like that, but of course, this is M2. This is M2 money stock. This is how much dollar are in the US financial system. In the US financial system, you can see we had 2020, the events of 2020. We were sitting cozy at $15 trillion. $15 trillion. When the events of 2020 happened, they printed up to 22, 23-ish, right? So an extra $7 trillion. So we added, in a matter of 1 year, 1 year and a half, we added the equivalent of, 5 years, maybe 7 years of money printing. We added that. And then the near 5 years of pain that we've had with the rates going up, the pain of, selling off the balance sheet at the Fed, all of the pain, the quantitative tightening that we've had, it barely made a dent. Like it erased like $1 trillion. And we've been going back up. Commercial banks have been printing back up as we've been decreasing rates. And now the Fed is openly printing 40 billion a month openly. So this is going to grow. Of course, that's the problem. Holding the dollar is the problem. The dollar is a melting ice cube. They're making many, many more of it. As Chair Powell said, we printed digitally. As a central bank, we printed digitally, right? And here's the bigger problem, of course. And of course, we know the Fed only creates a very small portion of these dollars. The Feds only create the 40 billion right now, right? But the commercial banks create it. And the commercial banks create it based on the rate of the Fed, based on the overnight rate. Most of the money is created by commercial banks. But here's the thing, and this is something we don't know much about, but the euro dollars, we don't know how many dollars are held abroad. But to the best of my ability, there's many, many more dollars held abroad in foreign bank accounts, and they make their way back to the US through trade. So the dollar is a melting ice cube. They're making more of it every time. It's I don't know. It's like a mass industrial product that's very easy to produce and to make. That's why dollars lose value. That's why our assets go up. Bitcoin is very hard to make, and there's a fixed amount. The dollars are very easy to make. Commercial banks create it. Foreign banks create it. Powell creates it. 40 billion a month buying government securities. And then we have the very cryptic message of Elon Musk talking about there were something like 16 magic money computers within the government. So is the government printing money as well? Right? I thought it was mostly the Fed, but the government could be doing it as well. So it's a mess. We have no clue as to how many dollars there are. And when I see people use M2 is an estimate. It's inaccurate. It's not like the blockchain where we know exactly how many Bitcoin there are. It's not even like stocks. Stocks, you know exactly how many stocks there are. Exactly. So anyways, I can't emphasize enough this. This is why the channel is called Beat the Denominator. I think over time, as we go back in quantitative easing, people will realize that beating the denominator is the most important thing. Over time, they will realize that. Anyways, let's talk about AI. Is AI a bubble? Okay, so now we're going to do a little sci-fi, I suppose, if you don't follow this pretty closely. The answer to that, in my view, is no. AI is definitely not in a bubble. We have so much coming in the way of large language models and more. First of all, AI agents are going to be a thing. Many of us already use AI every day. AI is your assistant in your daily task. But it's about to step up. Many companies, of course, hire AI agent, of course, and of course you have the proverbial, tele operator, right? The customer service, but that's going to be much bigger than that. Like you're going to have meeting with 50 AI experts and 5 humans in a meeting. Like companies will hire AI agents and AI employees. If you follow companies like ServiceNow, for example, they're working very hard on that. AI designed everything, whether it is MSTR stretch or whether it is rocket engines, whether it is ideas, whether it is a new medical drug, medical discoveries. AI helps you design just about everything, including music, including movies. It's mind-blowing, okay? Most knowledge most content, most knowledge will likely be created by AI going forward. Then you have GPU-based recommender system. They can get you hooked. So that means TikTok, Instagram, X, it's about to become a whole more addictive because the recommender system, if they're programmed to get your attention, they're going to get your attention like no other. But they can also get you healed. I talked about that. Recommender system at HIMSS, if the goal is to make you feel better, the recommender system is going to give you the drug, give you the custom medication that you need to feel better, much better than the doctor. AIs make money. They already do make money. We have plenty of examples of AI making money. AI creating websites, AI creating a crypto and pumping the crypto. AIs will make you money. Everybody with an ounce of agency in their system, anybody with an ounce of agency, an ounce of will be able to be somewhat of an entrepreneur. And maybe it's on a platform. Maybe you like AI music. You create a bunch of AI music and you put it on YouTube and Spotify. Maybe that's what you do. Or maybe you create a brand new website, a brand new idea. It doesn't really matter. Everybody can be an entrepreneur of one thanks to AI and hire a team of AI agents. Okay, so that's outstanding to me. AI will likely solve enormous tech challenges that could create enormous growth. And, a lot of people are saying, well, AI could help us solve fusion. I say AI could help us find superconductors. People in math are very excited about AI helping solve some of the longest held math mysteries. We know Nvidia, for example, is using AI in order to correct errors in quantum computers. So AIs, GPU-based AIs may actually also, fast forward quantum computing discoveries. And let's see, AI will free so much time for us. AI is hyper deflationary, hyper cheap. They will print like crazy. And those companies behind AI, in my view, they will be so much more valuable in the future. And I'm not going to go through every one company. There's really 2 sides to AI. You have the AI infrastructure place, so you have the energy and the data centers. And then, of course, you have the chip makers, the biggest of which is Nvidia. And so I'll just briefly talk about Nvidia. Nvidia was up today. Many AI plays were down today. Nvidia was up today. But Nvidia is the cheapest Mac 7. At a 0.47, it is a dirt cheap Mac 7. I believe the market is wrong about Nvidia. Nvidia is cheaper than so many old world companies that, frankly, in my view, are at risk of not surviving. Nvidia is cheaper than so many companies, so many old world sleepy companies. Nvidia is cheaper. And it might actually be much cheaper because, as we know, Jensen said 500 billion over the next 5 quarters, and he said that 1 quarter ago. So probably 400 billion to go. So if you do a multiple, it looks scary that it's a 4.6 trillion company. It looks scary, but actually, if they're gonna do $400 billion it sells at a 75% gross profit, the multiple is actually too cheap. And I know that's scary because people see the chart and they're like, okay, the stock ran too much. But to me, Nvidia is not that expensive. It's just not that expensive given the revolution they're triggering. And let's conclude with, the great data center sell-off. Like, what's going on today? Nebius sold off. Okay, Nebius had caught up a little bit, but Nebius sold off. We know Nebius is sold out. They're entirely sold out. We had, Cypher today? Didn't Cypher just announce like a big build-out somewhere in Ohio? That's how high the demand is. CleanSpark, as far as I'm concerned, still has Sandersville lined up for potentially an AI HPC deal. The CEO confirmed that on the last call, and all of the excitement literally evaporated. The stock's down 50% in a matter of, a month and a half. Fully evaporated. And this is true throughout the compute sector, throughout the miners turn into AI HPC plays sector. So the market is running these stories. And one day it believes in AI, one day it doesn't believe in AI. And in my view, it does that to shake up people, to shake people out of their stocks, to shape players who use derivatives, who play with fire, who play with deadlines. I mean, think about all of the people who had options, who use derivatives, thinking we would be at a peak in December here because it's seasonal. Like, too many people expected December to be the peak. That's why we crashed. Too many people were looking forward to the fall season. In my view, that's why we crashed. So there's no other way to investing than being a hyper long-term investor. And Nebius, Nvidia is very cheap, and Nebius, of course, is way, way, way cheaper than Nvidia. Obviously, totally different sector. But Nebius predicted to grow at 1,600%. EV over GP over RG is 0.04. So anyways, this video was kind of all over the place. I'll be busy the next couple of days with Christmas Eve and Christmas, so I'll still try to make a video. But if this video was a little all over the place, I'm sorry. But just to let you know, in my view, AI and Bitcoin not a bubble. And if you sell, you're buying fiat. And if you're buying fiat, you will be diluted, because this is the dilution. And Mr. Hawk is going to leave, and in May 2026, we're going to have Mr. Dove come. And Mr. Dove is going to print much more than Mr. Hawk. And Mr. Hawk, even though he was very hawkish, he didn't do that good of a job. Money supply is still at peak. Compared to when he took office. And I don't think we'll ever see a chair who reduces money supply at the end of their term. I don't think we'll ever see that. So anyways, this was not investment advice, not financial advice. This is only entertainment. I'm hoping you were entertained. Please like, please subscribe, follow me on Patreon, follow me on X. Thank you for watching, and have a wonderful, wonderful day.